Hello friends, Victor here. Welcome back to the Intelligent Investor channel. In this video, I'm going to analyze Broadcom stock. I'm going to explain why I believe Broadcom is still the best AI semiconductor stock after Nvidia. Moreover, I will explain why I believe Broadcom's market cap will eventually reach over 2 trillion by next year because of Broadcom's custom ASIC and its AI networking businesses. Now, just to give you more context, I've been very bullish on Broadcom stock since early last year. I even made 2 videos about it, one in April of last year and another one in January of this year. For example, if you had bought Broadcom stock back in April when I released the first Broadcom stock analysis video, your investment would have nearly tripled by now. Personally, I bought Broadcom stock last year and took some quick profits. Then earlier this year, I bought back into Broadcom stock again. If you have been following Broadcom's recent news, you will know that the stock has surged a lot recently because of several major catalysts. First, the biggest is Broadcom's recent announcement of a massive $10 billion deal with a new ASIC customer, which is confirmed to be OpenAI. Investors are really excited because OpenAI is the world's leading AI lab, and this partnership is just the beginning. OpenAI needs a lot more compute to grow its business going forward. This means Broadcom will likely earn more than $10 billion from producing custom ASIC AI chips for OpenAI in the years ahead. Second, many analysts and investors now believe that Broadcom's ASIC business is taking market share from Nvidia in the AI accelerator market. Later on in this video, I'm going to explain whether Broadcom can really compete with Nvidia in the AI accelerator market. And third, Oracle recently announced that its remaining performance obligation, or RPO, in cloud services surged 359% year over year, reaching $455 billion. This huge increase in RPO is mainly because of a massive $300 billion deal with OpenAI. Naturally, this will benefit Broadcom a lot because OpenAI, Oracle, and other hyperscale cloud providers will need to expand their AI data centers and invest in more custom ASICs going forward. This is why investors are really excited about Broadcom's ASIC business and its growth prospects over the next several years. In this video, I'm going to go over Broadcom's long-term growth catalyst and explain why I believe its market cap will eventually surpass 2 trillion. First, I will go over Broadcom's biggest headwinds and risks. Then I will discuss Broadcom's recent financials, its long-term growth prospects in custom ASICs and networking, Broadcom's stock valuation, and finally, whether I plan to buy more Broadcom stock going forward. If you enjoyed this video, make sure to hit the like button, subscribe, and turn on notifications. I will continue making high-quality investing videos every week that will help you become a great investor. You can also follow me on X at VicInvesting. I always share more investing insights and updates on the stocks I'm most bullish on. Each video usually takes me more than 30 hours to make, so if you'd like to support the channel, check out my Patreon in the video description. Our goal is to help our members become multi-millionaires through intelligent investing. As a premium member, you'll be able to follow all the latest stock trades and portfolio rebalancing. You'll get access to my intrinsic valuation models for all the stocks I'm analyzing. On top of that, you'll receive my latest stock ratings, exclusive premium content, and access to our Patreon-only Intelligent Investor Discord community. All the links to my Patreon and my X account are in the video description. Make sure to check them out. Now, before diving into Broadcom's biggest risk, let me first show you one of my investment accounts where I hold my Broadcom shares. This is just one of several accounts I manage. I also have 6 or 7 other accounts that have the same investing strategy and nearly the same stocks as this account. As I mentioned earlier, I bought back Broadcom stock earlier this year during Trump's trade war. Since then, Broadcom has gained around 81% and is now almost a 2-bagger stock. This account has been performing exceptionally well and is now outperforming the S&P 500 by a huge margin. The main reason is that I've been concentrating on the top AI tech companies such as TSMC, Broadcom, Nvidia, Meta, Google, and Microsoft. These AI tech companies are benefiting the most from the current AI revolution. I believe we're still in the early innings of the AI revolution. Frontier AI models and AI apps will become much smarter, more capable, and more efficient to run going forward. Hyperscalers will not slow down their AI spending because they need more AI compute to meet their customer demand and their own internal AI workloads. Now, on top of that, almost all the major tech companies are racing toward artificial general intelligence and even super intelligence. That's why I expect that these AI semiconductor companies and hyperscalers will continue performing exceptionally well over the next several years. I believe many of them will become large multi-bagger stocks over the next several years. Of course, Broadcom is one of the biggest beneficiaries of this current AI revolution because the company is the market leader in custom ASIC chips and large-scale Ethernet networking. When we invest in stocks, I think it's very important to understand the biggest risk first. As for Broadcom, there are several biggest headwinds and risks we should consider first. First, Broadcom's non-AI semiconductor business has been in a downward trend for many quarters already. Now it's slowly recovering. Broadcom CEO Hock Tan said that he expects the company's non-AI semiconductor business should have a very slow U-shaped recovery by the middle of 2026 or late 2026. Personally, I'm not too concerned about Broadcom's non-AI semiconductor business because Broadcom's growth will be mainly driven by its AI networking, custom ASIC business, and VMware going forward. Second, Broadcom's current stock valuation is quite high because many investors and analysts are very bullish on Broadcom's AI networking and custom ASIC business. The stock is likely overvalued now. More on this later. And third, a large percentage of Broadcom's value is from several major customers, including Apple, Google, and Meta. For example, at the time of making this video, Broadcom's ASIC business has just 4 major customers: Google, Meta, ByteDance, and now OpenAI. In the custom ASIC AI market, there are 3 key players that have the expertise to design custom ASIC chips at scale: Broadcom, Marvell Technology, and Alchip. The biggest risk for Broadcom is that if Google were to change future TPU designs to Marvell Technology, or if Google simply reduces its ASIC orders, that would greatly impact Broadcom's ASIC business. That said, I don't think this will happen. Google will need much more AI compute and many more TPUs to support its AI services. Google has partnered with Broadcom to build several generations of TPUs already. Based on what I know, Google relies on Broadcom's expertise in custom ASIC design and large-scale high-speed networking. Because of that, I don't think Google will shift major TPU designs to Marvell Technology or Alchip. That said, keep in mind that Broadcom's ASIC business is highly concentrated with just a few major customers: Google, Meta, ByteDance, and now OpenAI. As for Broadcom's wireless business, it is still heavily dependent on Apple. Broadcom makes the Wi-Fi and Bluetooth chips, as well as FBAR, thin bulk acoustic resonator filters, for Apple's devices. In the past, Apple accounted for around 20% of Broadcom's total revenue, but this share has been declining in recent years because Apple has been building more of its chips in-house instead of relying on Broadcom and other chip makers. For example, Apple has already started using its N1 wireless chip for iPhone 17. Looking ahead, I believe Apple's contribution to Broadcom's total revenue will continue to decrease because Apple is working to replace Broadcom's FBAR filters in iPhones with its own in-house chips. However, according to several industry resources, Apple is reportedly planning to co-develop its custom ASIC AI chip with Broadcom. If this happens, it will likely help Broadcom offset potential declines in its wireless revenue from Apple. Moving on, let's take a look at Broadcom's recent earnings and financials. As you can see from this summary, Broadcom has exceptionally strong financials. For example, at the time of making this video, Broadcom's trailing 12-month free cash flow is nearly $25 billion. This is one of the highest in the semiconductor industry. Its margins are also outstanding. Broadcom has a gross margin of about 67%, an operating margin of around 38%, and a free cash flow margin close to 42%. These are among the highest in the semiconductor industry. When it comes to operation efficiency, Broadcom has high double-digit return on assets, return on equity, and return on invested capital. All these financials are much stronger than AMD's. Right now, only Nvidia has better margins and stronger financials than Broadcom in the semiconductor industry. Now let's take a look at Broadcom's recent earnings. In the latest Q3 quarter, Broadcom's revenue grew 22% year over year. Its quarterly free cash flow came in at $7 billion, representing 44% of revenue. Looking ahead, management expects Q4 revenue to increase by around 24% year over year, with adjusted EBITDA at roughly 67% of projected revenue. This suggests that Broadcom's annual revenue should grow by around 23% to 24% in 2025. This revenue growth rate is outstanding, especially considering that Broadcom already has a huge revenue base and is already one of the largest companies in the world. Here's the important part you should know. Management stated that they expect AI semiconductor revenue to accelerate to $6.2 billion in Q4. This means Broadcom's AI revenue should reach around $20 billion in 2025. Even more importantly, Broadcom's AI revenue is expected to double to about $40 billion by 2026. This is because of Broadcom's recent $10 billion deal with OpenAI. More on this later. Now let me show you Broadcom's financials over the past 5 years to give you a clearer picture of the business. During this period, Broadcom has maintained very consistent revenue and operating income growth almost every quarter. This is because of two main reasons. Broadcom has increased its investments in infrastructure software businesses over the years, and its ASIC and AI networking businesses have been benefiting the most from the current AI boom. Here's another important point to know. Back in November 2023, Broadcom spent about $69 billion to acquire VMware. This was a massive investment at that time. Broadcom had to take on $30 billion in additional debt to buy out VMware. This acquisition has already paid off for Broadcom because it has made Broadcom a much larger player in the infrastructure software market, especially in the virtual machine VM market. More importantly, VMware's revenue is mostly subscription-based. This has made Broadcom's overall revenue much more stable, and it offsets Broadcom's semiconductor revenue, which is much more cyclical. For example, in the most recent quarter, infrastructure software revenue, which is mostly from VMware subscriptions, accounted for about 43% of Broadcom's total revenue, while the semiconductor business contributed around 57% of the company's total revenue. During the same period, Broadcom's operating cash flow and free cash flow have grown consistently over the past 5 years. I believe this trend will continue, driven by Broadcom's VMware, AI networking, and ASIC business. In terms of margins, Broadcom has maintained exceptionally high gross margin, operating margin, and free cash flow margin almost every quarter over the years. I believe this trend will continue for many years because Broadcom's management is very disciplined in acquiring businesses that have stable revenue growth with strong margins and free cash flow. Moreover, once Broadcom acquires a company like VMware, management typically makes the business run much better and makes the business much more profitable by cutting non-essential products and services, reducing headcount, lowering operating expenses, and refocusing the business on its core products that generate the most revenue and profit. At the time of making this video, Broadcom still carries a large amount of debt, mainly because the company took on an additional $30 billion debt to acquire VMware back in November 2023. Currently, Broadcom has about $66 billion in gross debt compared to $10.7 billion in cash. I'm not too concerned about this because Broadcom's debt to EBITDA ratio is still below 2, and its debt to free cash flow ratio is below 3, which I consider is still manageable. Broadcom generates nearly $25 billion in free cash flow each year and plans to pay down debt gradually over the next several years. Also, most of the company's total debt is long-term, so I don't think this is a huge issue right now. Now, let's talk about Broadcom's long-term growth prospects and why I believe the company will reach over $2 trillion in market cap. According to this consensus forecast, Broadcom's revenue is expected to grow by about 23% year over year in 2025. After that, Broadcom's revenue growth is projected at 34% in 2026 and 23% in 2027. EPS is expected to grow significantly this year. After that, EPS growth is projected about 36% in 2026, 27% in 2027. So you may be wondering, what are the biggest growth catalysts for Broadcom going forward? I believe there are several major drivers that will benefit the company over the next 5 years. First, I expect VMware will continue earning very consistent subscription revenue and free cash flow growth going forward. Here's why. After acquiring VMware, Broadcom essentially forced all its customers to move from the previous perpetual software licensing model to a subscription-based model, which is much more expensive for many customers. Broadcom also streamlined VMware's products into two main platforms. The VMware Cloud Foundation (VCF) platform that is mainly for large enterprise customers, and the VMware vSphere Foundation (VVF) that is mainly for small and mid-sized businesses. Here's the important point. VMware is the gold standard in machine virtualization. Many large enterprises have invested heavily in VMware software platforms over the years. This makes it extremely costly and time-consuming to switch to other VM competitors. Broadcom understands this huge competitive advantage. By forcing VMware's largest customers onto the subscription-based VCF platform, Broadcom will have many more cross-selling opportunities going forward. Based on what I know, Broadcom will be able to help its customers deploy private clouds on their premises and upsell additional services such as enhanced security, disaster recovery, and even running AI workloads on virtual machines going forward. The second major growth catalyst is Broadcom's custom ASIC business, which is making custom ASIC AI accelerators for hyperscale customers. Contrary to what many investors think, Broadcom's custom ASICs are not meant to replace Nvidia's AI accelerators. Here's why. The custom ASIC business is a very niche market. Only a handful of companies have the resources and expertise to develop their own AI ASICs. Custom ASIC accelerators are generally more energy efficient and even more performant than Nvidia's general-purpose AI GPUs in very specific workloads. However, custom ASICs have many limitations. Custom ASICs are designed for very specific workloads such as AI inferencing for a specific large language model. They are not very flexible like Nvidia's GPUs. Custom ASICs don't come with a robust AI software stack like Nvidia's CUDA. This means companies building custom ASICs have to spend hundreds of millions of dollars on ASIC chip design, as well as millions of dollars more to develop the software to run on them. Now, compared to Nvidia, Nvidia's AI GPUs and AI systems are the gold standard for large-scale AI training and inferencing workloads. Nvidia's AI GPUs come with CUDA and a large AI software ecosystem that's well supported by millions of developers around the world. This is why most frontier AI models are developed on Nvidia's CUDA accelerated AI systems first, and only later they are ported to custom ASICs for inferencing workloads. That said, almost all of the major hyperscale cloud providers and leading AI labs are developing custom ASICs mainly for their own internal AI workloads. This is because they want to reduce their reliance on Nvidia, and at the same time, they want to lower the total cost of ownership or TCO of AI accelerators, which are typically the largest expense in an AI data center. Now, if you look at this AI chip roadmap, you will see that Broadcom is already working with Google, Meta, ByteDance, and now OpenAI on their next-gen AI ASICs. Broadcom is also working with other potential customers, including Apple, SoftBank, and ARM Holdings. This means Broadcom will likely capture a larger share of the AI accelerator market in the upcoming years. If I had to make an educated guess, I believe Nvidia will retain about 80% to 90% market share in the long run because of its CUDA ecosystem and its AI software stack, which are extremely difficult to copy. Nvidia's management said this in the recent earnings call. We are at the beginning of an industrial revolution that will transform every industry. We see 3 trillion to 4 trillion in AI infrastructure spent by the end of the decade. The scale and scope of these build-outs present significant long-term growth opportunities for Nvidia. On the other hand, I believe Broadcom should capture around 5% to 10% of the AI accelerator market in the long run because its major ASIC customers, including Google, Meta, and OpenAI, are planning to deploy over 1 million AI GPUs and custom ASICs across their data centers in the coming years. As I mentioned earlier, Broadcom's AI revenue is expected to be around 20 billion this year. Next year, Broadcom's AI revenue is expected to double to about 40 billion. Management initially guided for around 60% year-over-year AI revenue growth in 2026, driven by its 3 main ASIC customers, Google, Meta, and ByteDance. Now, right before I started making this video, Broadcom announced a $10 billion ASIC deal with its 4th qualified customer, OpenAI. This means Broadcom's AI revenue should double to around 40 billion by the end of 2026. On top of that, several sources reported that Apple is working with Broadcom to co-develop a custom ASIC AI accelerator, which is expected to enter mass production by the end of 2026. If this turns out to be true, Broadcom would generate AI revenue not only from Google, Meta, ByteDance, and OpenAI, but also from Apple in the upcoming years. This is why I think Broadcom should capture around 5% to 10% of the AI accelerator market in the long run. Many investors don't realize this, but Broadcom is a market leader in Ethernet AI networking. Broadcom earns a significant share of revenue from its networking chips and not just from its custom ASICs and XPUs. The demand for networking chips is increasing very quickly because hyperscalers need to connect hundreds of thousands of processors and HBM memory to operate as a single AI cluster. To achieve this, hyperscalers often use Broadcom's Tomahawk and Jericho switch to scale up and scale out their AI data centers. Today, nearly all major cloud providers are building gigawatt-scale data centers with thousands of servers and hundreds of thousands of AI accelerators, all linked together through a single high-performance networking fabric. Here's the key point you should know. Most hyperscalers and AI labs prefer Ethernet networking over Nvidia's proprietary InfiniBand networking. Broadcom offers some of the best Ethernet networking chips in the industry. That's why many hyperscale customers invest in Broadcom's networking switch and interconnects to connect their AI servers and data centers together. Let's talk about Broadcom's stock valuation. There are many ways to value the stock, but the easiest way is to look at its 4 Ps and expected growth rates over the next 2 years. Right now, I believe Broadcom is overvalued because its 4 Ps are relatively high. For example, Broadcom's 4P is projected to be around 53 this year and about 39 next year. In my view, both of them are quite high even when we compare them to the company's estimated EPS growth rates over the next 2 years. Now let me show you the investing app I've been working on with a business partner for over a year. We plan to release it later this year once we finish registering our company. One of the most useful features is our fair valuation tool. This tool helps you find out whether a stock is likely undervalued, fairly valued, or overvalued. I always use this tool to find out when a stock is deeply undervalued. For example, earlier this year and during Trump's trade war, I bought back Broadcom stock when it was still undervalued. Now, my Broadcom holding is almost a 2-bagger stock. In this chart, the orange line represents Broadcom's fair value over time. The blue line is the stock price, and the dotted lines are the price targets. Typically, Broadcom's fair value increases over time because of the company's higher earnings and free cash flow growth. Right now, I believe Broadcom is overvalued based on this fair value line. Personally, I will wait for the stock to dip below its fair value, which should be around $308 per share before buying it again. I also calculated Broadcom's intrinsic value using my intrinsic valuation model. I use this model for every stock I analyze to find out whether a stock is likely undervalued, fairly valued, or overvalued. If you'd like to access this intrinsic valuation model, you can download it from my Patreon blog. The link is in the video description. Now, since this video is getting long, I will just share a quick summary here. Based on my calculations, Broadcom's intrinsic value is around $305 per share. For comparison, Morningstar estimates Broadcom's fair value at $325 per share, while our investing software estimates Broadcom's fair value at $308 per share. This gives Broadcom an average fair value of roughly $313 per share. This means I believe Broadcom stock is likely overvalued now. So will I buy Broadcom stock? Personally, I plan to keep buying more Broadcom shares over time whenever the stock becomes undervalued and dips below its intrinsic value. Right now, Broadcom makes up only about 2% of my stock portfolios, but I would like to increase that weighting to as much as 5% over time. I'm bullish on Broadcom's ASIC and AI networking businesses and their long-term growth prospects. Broadcom has a strong ASIC roadmap with major customers including Google, Meta, ByteDance, and now OpenAI. Over the next several years, I believe Broadcom will likely capture more share of the AI accelerator market because its largest ASIC customers are all planning to deploy over 1 million AI accelerators across their AI data centers. My best estimate is that Broadcom should capture around 5% to 10% of the AI accelerator market, while Nvidia will likely retain around 80% to 90% of the AI accelerator market in the long run, because of its CUDA ecosystem and the support of millions of developers around the world. Now, everything I've shared here is just my opinion and my analysis that's based on my own research. They are not financial advice. There are always risks with investing, so it's very important to invest in what you truly understand and avoid speculation. Always do your own research and extra due diligence first before making any investment decisions. Thank you for watching and supporting the channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.